Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, March 17th, 2009. Well, we're seeing a nice little move up on Wall Street right now, really after Summers was just talking to Steve Leisman on CNBC Live, and really from that point on, the market started to move up as soon as he started to speak. So he's a confidence booster for the market right now. And overall, we're seeing the market make a nice move up. We had a beautiful bullish flag pattern here in the charts we had called out in the chat room, obviously, and discussed a little bit on that. And from that move, we've seen a nice breakout to the upside. Now, we are hitting major resistance here, and you might not see it on your 10-minute chart that you're looking at on the SPY with me now, but I want to show you this on the 60-minute. Right here, folks. The 200 moving average on your 60-minute chart has just been tagged to the upside, and that should be some pretty significant resistance in this market, and it would not shock us to see a pullback in this market in the near term here. So I'm going to flip back from the 60-minute back to the 10. We're going to discuss a little bit about the 10-minute chart, and then we'll go from there, okay, folks? So just keep that in mind. Resistance right here in the market. Right now, the market is up. The Dow up 86 points, the NASDAQ up 29, and the S&P up about 13.5. Really about 1% plus on the S&P and Dow, and the NASDAQ up 2%. The NASDAQ was a weaker index yesterday, so you're seeing the recovery there as the financials really were the stronger area yesterday until late in the day, and the NASDAQ was weak all day with Apple leading the downside. You had a bunch of other players there on the tech side all red. Today they were all green since the open. Now, again, keep in mind, guys, you're starting to see this market pull back here off of that 60-minute 200 moving average. Now, I just drew, you can see in your chart here I have up your 10-minute SPY chart. You have your 20 moving average in yellow, the white is the 50, and this green one down here is the 200. Now, the key is this. I put in this one trend line. Why? Because it stretches all the way back multiple days. Actually, over a week it stretches back, and it's too hard to draw it in with you guys, and it takes too much time, and I have to extend the chart and so forth. But I really want to show you where I got it from because it's an absolute key one. Look at this lows on the market today. You pierced it, bounced, pierced it again, and bounced. So this one's an extremely key one, and we're going to go back to the 10th, the low on the 10th to grab that bottom point, extend it to the low here on the, there we go, on the 12th right here, okay, and then extend it all the way up and see where it comes to, and sure enough, it crosses right at the lows today and the secondary low pivot point as well. So that's telling you there's a key level there, folks, and what I'll say right now is if this market pulls back today, which I'm not sure if it will, we'll discuss the charts, we'll put out what we think will happen, but for now, if it does happen to break this pink trend line to the downside, first stop would be a double bottom, all right, and then the 200 moving average down here. All right, those would be your two levels on your downside should this pink line get taken out. That's how important this line is, and you can tell how important it is by the fact that the market came down twice and hit it today on the SPY intraday, and each time bounced up beautifully. Now, there are some other key levels in this market that you want to watch, folks, all right? Number one, you want to take a look at, obviously, the 60-minute 200 moving average, which is giving you this resistance point right up here, all right? But there are some other key ones you want to look at as well. First of all, take your levels, and we're just going to start and go right into this. Take your high point from this closing candle and extend it right over. All right? The beauty of this candle gives you exactly the first pivot high before a little bit of a pullback consolidation pattern here. Notice how the first candle of the day, we basically opened the market flat. All right, the market kind of recovering from that little late day sell-off yesterday, and you can see that on the chart here all the way into the close. And then you got that little continuation sell-off right to this trend line. As soon as it hit that trend line, you got a nice pivot up to the upside. Now, again, what you did, and this is why it's key to understand where to draw your pivot lines from and your trend lines, you take that high, extend it right over, and the market opens up, pierces that upside line, falls back down, pierces the downside line, then rallies up, pierces the upside line again on 3 consecutive candles, and pulls back each candle. Then finally you break to the upside, but this is the key. Take your pivot low from yesterday morning and draw it right over. And look at that. So all of a sudden you have your next pivot point in the markets based on knowing where to draw these trend lines. And this is all stuff that we teach. And by the way, folks, we have a webinar on this coming Saturday, March 21st from 1 p.m. to 6 p.m. You can sit at your home or your office. All our slides will appear on your screen. You'll be on the phone on a 1-800 number live to our chief market strategist, who's the tops in this game, guys. He's tops. He knows everything. Any questions you guys have, he will teach you guys our proprietary techniques. All that stuff will come out in that webinar. You can sign up on our website at InTheMoneyStocks.com. But in any case, take that pivot point, and what do you have? You have the pivot to the downside for the short, And then look at this. All inside bars, guys. No closes below the low point on this chart right here. And that's very, very important, because this is what we're calling an in spirit of bull flag here. All inside bars between this green bar and the red one's down. That's a bullish candle formation. And sure enough, what happens? It tells you the market's going to break up. And what happens to the market? It rallies to the upside. All right, and that's just understanding. You got to know this kind of stuff, folks. Very, very important to understand and know. All right. Now, a couple other things, folks, and I want to just point these out. And we're going to draw on a couple more trend lines, obviously taking the top here. And this is your last one. And you wondered why not only is the 60-minute hitting resistance here on the 60-minute, the 200 moving average right here. It's the second hit, so it's never quite as strong, but still should be very strong. But you also have on your 10-minute chart this here taking the high of the opening candle, extended over. Notice how the high of that opening candle was resistance here when you moved up into it. Then it finally broke, and then it came down to settle on it again as support. So that's telling you that line is so important. You have to extend it. It also fell down, found support here later on that candle, and bounced before breaking down later in the day. So that's why it's so important to draw this line on, because all of a sudden, this chart is telling me that right at this level, you have a pretty decent resistance line. This line, and on the 60-minute chart, the 200 moving average. All right, and the more levels you have, and the more levels you can find, the more likely the play will work to your advantage, whether you're going short at resistance or long at support. So I can't stress that enough, how important that is. And you can see how the market's halted right here. All right, and this is, again, because of this line and the 200 moving average on the 60-minute chart. All right, so these are your constant levels. Now, should you break above this level, then obviously your next target will be right here. All right, your highs of the day from yesterday, that would be your target in this market and where you would look for this market to go. All right. Now, again, as I mentioned, the Leisman on CNBC was talking to Summers, and who's the chief advisor for Obama on economics, and the market really did get a bid. He started talking right over here, and as soon as he started talking, the market took a nice little move up higher, right into that 200 moving average and this trend line. All right, so what you're going to look for now is consolidation. As of now, these bars are consolidation, but again, that could switch very easily if it gets too steep. It's all about knowing your inside bar rules, and all this stuff, again, you have to be taught, and once you have it down, you'll improve your trading immensely. We also go over a fair amount of this stuff in the Research Center, but not as in-depth as in the webinar, obviously, as it's more of a guidance and an educational tool for the Research Center, but the webinars really are proprietary stuff. Very important you guys take that. Those of you that really want to go to the advanced level of being a technical, technician, if you will. All right? So again, watch this level here, guys. A lot of resistance right here on this market. I'm going to put that cross right there. Watch for consolidation. Watch for your pattern formation. Is it a bullish flag pattern, or do we trade sideways and then start dumping out down a little bit too much and possibly form a bear flag and retest this line down here? This line will be extremely key, folks. Can't stress this enough. I'm going to draw on it again. This one right here on the downside, this one right here on the upside. These are your two levels to watch, all right? Right now, this upper side resistance level at the 200 is approximately, let's get a quote on that, 77.15-ish, 77.15 to 77.30. Right in that level is a lot of resistance. On the downside, this one's sloping, but currently sits at around 76.25. But remember, it's sloping up, so it's going to be continually getting higher and higher throughout the day. Obviously, your moving average will play some role, but we've gotten more and more away from using moving averages because they always pierce them till they get to a trend line. Look at this. Perfect example today. Let me erase this line. A lot of people would say, well, it's the hit of the 50 moving average. It should stall out there. Well, you got a mini stall here and then a little bit of a red candle, but then it rallied through that really quickly. The reason why? Because it was going right to the 200 and this trend line. That's what it is, guys. The 200 on the 60-minute and this trend line. It had to get there, and a lot of people get too bogged down. A lot of the technical traders out there, they just don't know trend line analysis. They get bogged down with moving averages, stochastics, RSI, nonsense like that. I'll tell you, the last time I looked at, and focused on an RSI and tried to read it was literally a year ago. Aside from maybe the occasional note of divergences showing up for a swing trade, that's about it. I mean, it's just not worth it other than that, in our opinion. All right, we're pure players that we focus on price, pattern, time, trend line analysis. We don't use all these computerized nonsense. Once everyone uses it, it doesn't work anymore. That's the way. It's the way why contrarian thinking is so positive in the market, because as soon as everyone's using it, it doesn't work. That's a key thing to remember, guys. All right, come join the Research Center at InTheMoneyStocks.com, the intraday stock chat with live video. Obviously, the webinar is going to be huge on this Saturday, filling up fast. Come join. We look forward to having you. Take care.